Japan is rewriting the rules of crypto, not to close the market, but to professionalize it. On October 2022, Japan's Financial Services Agency convened one of the most consequential policy meetings in its digital asset history. This high-level working group, which advises the Prime Minister and the Finance Minister, debated the future of Japan's crypto regulatory framework, and the direction is clear. A safer, more institutional-grade market that remains open to innovation and international participation. Welcome to Japan Digital Asset Weekly, episode 59. I'm Keisuke, CEO of Wakyodo and venture partner at Onigiri Capital, a blockchain-focused VC fund. This week, we unpack what happened inside Japan's latest FSA working group and what it means for global exchanges, institutional investors, and builders entering the market. The FSA's agenda this time is not about rewriting the rulebook from scratch. It's about fusing Japan's securities regime with its existing crypto framework, merging maturity with innovation. Under the new direction, crypto exchanges will face supervision similar to broker-dealers, elevating many of today's self-regulatory standards into actual law. That means stronger operational controls, clearer accountability, and faster protection for users when things go wrong. The FSA wants to preserve what already works: client asset segregation, cold wallet custody, and insurance for hot wallet risks, while adding supply chain level security obligations. Exchanges will also need to hold reserve funds or insurance to compensate customers swiftly in case of incidents, and maintain rigorous internal governance, from token listing reviews to customer risk checks and market surveillance. Another notable addition is an exit framework, ensuring that customer assets are returned orderly if a business winds down. That single mechanism could dramatically improve user confidence in Japan's crypto market. The FSA also discussed new intermediary model, a legal category for companies that broker or route crypto activity without running an exchange themselves. This crypto service intermediary concept lowers entry barriers while aligning these players with securities intermediary standards. For banks and insurers, the tone remains cautious. No full-scale crypto dealing or broking at the parent company level yet. But the agency opened a new door, allowing limited investment holdings as a diversification tool under the strict risk controls. The subtle shift could make it easier for financial group subsidiaries to participate in crypto markets responsibly. The FSA also signaled a tougher stance on unregistered overseas exchanges serving Japanese residents. Expect stronger criminal penalties, emergency injection powers, and new purpose checks for first-time transfers to unhosted wallets. There's also talk of cooling off periods for new recipients, practical friction to project retail users. Cross-border cooperation is expanding too. Japan will deepen collaboration with other regulators to monitor illicit flows and ensure compliance by platforms with global reach. For decentralized exchanges, the approach is measured. No blanket regulation yet. Instead, the FSA will continue to watch how DEX-related activities like deployment, interface operation, or liquidity provision may already fit under existing laws. Perhaps the biggest policy upgrade is Japan's plan to build a comprehensive market integrity framework for crypto, something that mirrors its securities market. The new regime would apply insider trading and market manipulation rules to tokens listed on domestic exchanges, and even to relevant activity on DEX and P2P venues. For listing phases, major holders and exchange insiders would fall under disclosure and penalty rules. The FSA also proposed a searches mechanism and expanded monitoring rules for the Securities and Exchange Surveillance Commission and the Japan Virtual and Crypto Assets Exchange Association, a self-regulatory organization certified by Japanese FSA. Several commissioners warned against overreach, stressing the need for clear definitions and sufficient technological capacity to make enforcement credible. In short, transparency, not over-regulation. The FSA is also targeting investor education and marketing practices. Expect sharper, crypto-specific risk disclosures and stricter controls on promotional messaging that encourages speculative trading. Rather than blanket restrictions, the focus is on literacy, transparency, and fraud prevention, helping retail users understand what they are buying, not banning access altogether. Throughout the meeting, one word kept resurfacing: balance between innovation and protection, between retail access and institutional credibility, between national security and international openness. The tone was pragmatic, non-punitive. Commissioners emphasized threat-informed security, insurance-backed resilience, and collaboration with neutral cybersecurity bodies, hinting at a future where Japan's crypto infrastructure operates more like traditional finance, but without losing its edge. Some members also urged policymakers to distinguish between retail and institutional tokenization use cases, recognizing that corporate RWA and stablecoin projects demand a different risk framework than speculative retail trading. For global builders and institutions, the message is clear. Japan isn't closing its doors. it's professionalizing them. The coming framework points toward clearer licenses, stronger operational standards, and a safer, more predictable environment for both retail users and institutional participants. Intermediary models will become more viable, banks can participate through subsidiaries under guardrails, and investor protection tools will make consumer engagement more sustainable. Yes, marketing to Japanese residents without registration will soon carry heavier risks. Yes, due diligence on custody, listings, and surveillance will become mandatory. But for firms willing to meet higher standards, Japan is becoming a scalable, globally aligned, and collaboration-friendly digital asset market. That's all for this week's Japan's Digital Asset Weekly. If you found this episode insightful, please like, subscribe, and share. At Wakyodo, we help global digital asset projects navigate Japan's regulatory landscape, from market entry to strategic partnership. Thanks for watching, and see you next Monday.